What's up, everyone? It's Caddy with Money Vesting. So we've got a huge week in front of us because not only do we have Employment Friday for the United States and Employment Week for the US, but we've also got Jerome Powell, Chairman of the Federal Reserve, coming out with his speeches and testimonies on March 7th and March 8th. That's going to be Tuesday and Wednesday for the upcoming week in front of the United States Senate and the House of Financial Services Committee. Very, very important stuff. These are usually testimonies that last 3 to 4 hours long. I will be live to cover both of those days, both of those events as much as I can. And we'll talk a little bit about the earnings as well and the technical levels that we need to watch for this coming week. So hope you guys enjoyed this video, find it helpful. If you do, make sure that you drop a like. Don't forget to subscribe to the channel. If you're just joining us for the first time, the link to our Discord and Patreon is going to be down below. If you're interested in joining us, getting access to all the buy and sell alerts, options alerts, trade ideas, and of course, swing trading alerts and the private videos on Patreon as well. So going over to the earnings first, this right here is going to be the earnings calendar. We don't have a lot of companies reporting, at least not the ones that actually matter in the S&P 500. No offense to some of the other companies here, but we do have C reporting earnings. We've got CrowdStrike after the bell on Tuesday that I think is going to be very important for the market. Dick's Sporting Goods and Squarespace also reporting pre-bell on Tuesday, March 7th. And then on Thursday, we've got companies like JD.com, Ulta, DocuSign, BJ's, Oracle, and Gap reporting on that day. And that pretty much wraps up the earnings week, and we're pretty much nearing the end of the earnings season for the fourth quarter calendar year 2022. This right here is going to be the economics calendar and everything that is coming out. So we do have Jerome Powell speaking on March 7th and on Wednesday, March 8th, both of those days at 10 a.m. Eastern. So I'm going to be live, like I said, to cover that speech and testimonies, and we'll listen in what he has to say with respect to monetary policy, inflation, interest rates. And these are the ones that he's actually grilled on. I mean, because, the Senate is pretty brutal when it comes to questioning. The line of questioning is definitely, kind of tailored in a way or phrased in a way that's definitely offering some criticism to Jerome Powell. So I think it's going to be very interesting for us to listen in on what he has to say. And the markets, you can believe it, are definitely going to be moving on what Jerome Powell has to say both on Tuesday and Wednesday. And I think Janet Yellen might also be a part of it, talking a little bit about the Treasury Department and the fiscal budget as well. But we've also got wholesale inventories coming out. We've got consumer credit that is going to be released at 3 p.m. Eastern. We've talked about credit cards. We've talked about the total debt when it comes to consumers, ex-housing and housing included, sitting at over $16 trillion, and credit card debt is up to almost $1 trillion in the U.S. So all that is going to be super important. We've also got the Beige Book coming out at 2 p.m. Eastern on Wednesday. And of course, ADP employment report comes out earlier in that day, 8:15 a.m. Eastern, along with international trade in goods and services, and the JOLTS numbers coming out at 10 a.m. Eastern. So it's going to be a locked and heavy week with respect to economic data, with respect to employment, and of course, Jerome Powell's speech as well. Now, on Thursday, we've got the Challenger Job Cut Report, which pretty much is going to tell us a little bit about how many companies pretty much cut their jobs, cut employees, laid off employees, for which I'm going to be doing a separate video, more dedicated, more detailed video on that later. And then we've also got the jobless claims, which are going to tell us about the initial weekly claims, unemployment benefits, how many people actually are filing for that week over week. And then the big report is going to be scheduled for Friday, March 10th, the employment situation, which is going to tell us, of course, about the unemployment rate, participation rate, wages, increases in hourly earnings. All those things are going to be packed into that video or into that report, and I'll be doing a separate video on employment as well. So this right here is going to be, again, 10 a.m. Eastern, testimony, Chairman Jerome Powell, semi-annual monetary policy report to the Congress before the U.S. Senate Committee on Banking, Housing, and Urban Affairs. We'll be covering that live, so make sure that you hit that notification bell so you don't miss out on when we go live. And this is going to be the following day, Wednesday, March 8th, semi-annual monetary policy report to the Congress before the U.S. House Financial Services Committee. And again, that's going to be at 10 a.m. Eastern, as well as the Beige Book that comes out at 2 p.m. Eastern on the very same day. Consumer credit month-over-month consensus is $26.4 billion increase. And again, the debt levels are already at such high levels. And, as savings rate continue to deplete for U.S. consumers, they are tapping more and more into these savings right now, and also tapping into the debt. In other words, using a lot of credit cards and retail cards in order to facilitate their purchases. So the consensus right now, $26.4 billion. is going to be that number in January versus smaller than expected increase of $11.6 billion in December. So obviously December, we saw a little bit of a prior number was 11.6 billion, but consensus for January definitely a lot higher. ADP employment report consensus is that we added about 175,000 jobs in the month of February. So again, this is going to be for the prior month, lagging indicator for the employment numbers. And this is going to be for JOLTS. In other words, how many jobs are currently open in the US, sitting at 10.6 million. Prior number was a little bit over 11 million, but the consensus is 10.6 million job openings, which obviously is going to represent that more and more vacancies are being filled in the US, or job openings in general are going down as companies may not be hiring. So it could be, one of the two or both of them combined can bring down the JOLTS numbers a little bit. Now, employment situation, the consensus for non-farm payrolls month over month for next week, next Friday, March 10th, 215,000 with unemployment rate pegged at 3.4%, 50-year low, sitting exactly where we are right now. Private payrolls to increase by 213,000 and manufacturing payrolls to increase by 13,000. You will see a little bit of a softness in the labor market because prior number was over 500,000 jobs. That was a very, very hot read on employment. And the consensus right now is pretty much half of that, right? So more than half of that. So that's a pretty significant decline, expecting a substantial softness in the labor market moving forward. And average hourly earnings expected to increase 0.3% month over month, with the work week sitting at slightly lower 34.6 hours per week. Another thing that I wanted to point out is that there's a really cool platform, layoffs.fyi, which pretty much has a good tracking of all companies laying people off right now, especially in the tech sector, how many total employees are laid off. And what they're really doing is they're putting together lists of actual employees from the companies being laid off so they can find new jobs and new positions. So far in 2023, as you can see, 453 tech companies have laid off a total of 123,000 employees. And you know what's even more interesting is that 123,000 has been in 2023, in the first 2 months of this year. If you go back to 2022, we had over 1,048 tech companies laying off a total of 161,000 employees. And that's for the entire year, entire 2022. And so far in the first 2 months alone, we are at, 123 divided by 166. We're already 75% of our way there. In fact, I think it'll be a little bit higher because it's 161, 76.3% of our way already there in layoffs for 2023. And it's coming from half those companies. And you can see how every single month it's broken down. So we saw a lot of layoffs in November, December, and then January was the highest uptick with 268 companies announcing layoffs and doing layoffs, with over 84,000 tech employees being laid off. And then February, again, more and more companies, issuing layoffs, 170 more. And we had over 36,000, almost 37,000 employees laid off. In March, so far, in the first few days that we have seen this month, 17 companies have announced layoffs with over almost 3,000 employees, tech employees specifically, because this is not all employees. This is only tech layoffs in 2022 and 2023. This right here is going to be tech layoffs since COVID, right? So you can see how in second quarter 2022, is when we have really started to see a substantial increase and uptick in companies laying people off. And that has a lot to do with overhiring. And of course, the demand during COVID was so high that companies, did not anticipate the need for so many employees once everything was said and done and it was over. Now we're coming to the other side of COVID where the demand is kind of, rolling back a little bit. We are seeing consumer spending, even though retail sales remain strong. We're battling through higher costs of borrowing, lower spending, and companies are realizing that, and they're trying to be more efficient and, of course, laying people off in the tech sector. This right here are going to be tech layoffs by industry specific. So you can see that retail, consumer transportation, everyone 2022 is pretty high. But of course, all others included, 26,000. But majority of them are coming from retail, consumer, transportation, healthcare. A lot of these sectors are obviously seeing a lot of tech layoffs in 2022, of course. And this right here is going to be another really interesting table, which pretty much goes over specific companies that are laying, obviously employees off. You can see Google with the most at 12,000. We got Meta, 11,000, Microsoft, 10,000, Amazon, 10,000. You can pretty much go down the list. Salesforce, Amazon, again, 8,000. We got Dell, Philips, Booking.com, Cisco, Philips, IBM. So again, this is pretty exhaustive list that they've created. And obviously it goes over the location industry. And then some of the other resources, like I said, I don't want to go over that because it's going to have sensitive information for a lot of employees and their emails and all that stuff. But it is public information, right? It is available on the public domain. So you can check that out for yourself. But definitely, the bottom line is that we are seeing a lot of layoffs in especially the tech sector. How that's going to translate over to the labor market, we're going to find out next week. But I will be doing a more specific, more detailed analysis and video on the labor market with respect to the participation rate, with respect to the unemployment numbers, the average hourly earnings, the wages, all that stuff we'll be talking about in more detail in my other video. But talking about the S&P 500 now, we're kind of bouncing off of that 200 simple moving average. So that is a level that the market needs to hold at all cost. If we do get a breakdown below that 200 SMA, unfortunately, we are going to be sitting down to under 3,800. That's going to be that next technical support to watch. And of course, the resistance is going to stay put roughly at around 4,000, 4,100. That's going to be that next target and that next level to watch going into next week. And I've already done technical analysis on some of the big tech, large cap companies. So make sure that you do check that out as well. And then finally, NASDAQ here, we're getting a very nice bounce back up above that 200 simple moving average and getting a nice bounce from this previous resistance, now acting as a good support. And the next target and that resistance is going to be sitting roughly at that 300 SMA and also in line with that previous resistance where we have recently gotten rejected at, sitting roughly at 12,200. So those are going to be some levels to watch, and a big week for employment, for Jerome Powell, for the Beige Book, for ADP numbers. So there's a lot for us to go over. I will be live in both of those days to cover the testimony, and then we'll be doing some specific detailed analysis on the labor market for next week as well. So hope you guys enjoyed this video, found it helpful. If you did, make sure that you drop a like, subscribe to the channel, check out our Discord and Patreon links down below if you're interested in joining us. We'd love to have you on board. We've got a little bit over 3,600 members in our Discord. As always, happy investing, and I'll see you all in the next video.